Hello, my name is Jody Samuels, and welcome to Week 3 on the Trade of the Week series on the Forex market through FX Trader's Edge. I created an Elliott Wave course, and I'm an online trading advisor through Trading Post Financial Services. I also provide one-on-one coaching services through my FX Trader's Edge coaching program. To find out more about the Elliott Wave course or the online trading room, please contact tradingpostfinancial.com or send me an email directly to jody@fxtradersedge.com. The trade that we're going to take a look at this week is the Euro USD. The setup that we're going to look at is a simple divergence setup. So that's the lesson to be learned today. How do you cite divergence in the market? And how do you set up your charts to look for divergence in the market? Because divergence is an indication that the market is running out of steam. And when we can see divergence in a 5-wave sequence, then we would look to go the other way. It's a reversal pattern that is very, very powerful. The trade setup was a buy at 141.50 in the euro with a stop at 141.20. The three profit levels that we targeted were 141.84, 142.05, and 142.39. Again, this trade is based on the completion of a 5-wave move down. We see divergence in the Awesome Oscillator or the MACD, and we know the euro is running out of steam. We set our profit targets, and all profit targets are hit within 24 hours. Now let's look at the actual trade setup. This is the hourly chart. Where you can see the 5-wave sequence on the left is the price action that we are going to focus on. I'm now going to move to the 15-minute chart and the 5-minute chart. So we're looking at 3 different time frames for this setup: the hourly, the 15-minute, and the 5-minute chart. On the 15-minute chart, we can see where I've labeled a 5-wave sequence down. And you might ask yourselves, well, that's great, but how do we know that it's a 5-wave sequence down? We don't know Elliott Wave theory, we don't know how to count waves, and I'm going to show you an easy way to know that we've completed a 5-wave sequence down, and it's called divergence. But first, before we zoom in on the 5-minute chart, let's look at the horizontal lines that we have on this chart. The black line signifies the level at which we bought the euro at 141.50. The 3 profit targets are in green at 141.84, 142.05, and 142.39. Not a bad trade for less than 24 hours. Now we're looking at the 5-minute Euro USD. Again, you can see the 5 waves, the 5-wave move down, and we're looking for a completion of the 5-wave sequence in order to buy. You can see that I've drawn a trend line connecting the 0.3 and the 0.5, or the bottom of the wave 3 and the bottom of the wave 5. This is a downtrend. We make a new low in the wave 5. The price trades below the previous bottom, the previous wave 3 bottom. So in actuality, we trade down, we correct back up, and we make one more new low. If we look down at the Awesome Oscillator, which is a 534 histogram with a 5 moving average signal line and can also be replicated using the MACD, we see what we call divergence. And divergence is as follows. Divergence is when we make a new price low and we don't follow through with an oscillator low. That's called divergence. It means that the market is running out of steam. The market is losing momentum. The market is ready to turn around. On your keyboard, it looks like a greater than sign in a downtrend. In an uptrend, it will look as a less than sign. So this is a downtrend. So we see the greater than sign. Price makes a new low. The oscillator does not. It signals a buy. We buy it. The market trades higher. A beautiful trade. There are many such setups in the market. If you would only look for divergence in 5-wave sequences, you will do very well in the currency markets. For more information about the Elliott Wave course or about joining the FX Traders Edge OTA, please contact me at jody@fxtradersedge.com, and see you next week for next week's Trade of the Week. Happy trading!